What's up, guys? So I just wanted to make a quick trade review video here and talk about two trades that I made today over in the private server, and just talk about why they worked for me and why they went in my favor, to hopefully give you guys a better understanding of liquidity and market structure, and how you need to be looking at your charts in order to be successful day in and day out. So I had Netflix on the watch list this morning, mostly due to the inside day that we saw yesterday. So what I mean by that is that price never traded above the high of the previous day or below the low of the previous day. You can see the low is about 605, the high up here is about 640, and then yesterday we only had 626 and about 639. So price has stayed within the range of this day the whole entire time, and what that means is there's a lot of liquidity building on the highs and the lows of this range right here. And the reason that's important for us to know is because the large traders, the large institutions, and the people playing with a lot of size, they need that liquidity in order to get their orders filled. So a lot of times you will see them push the market to those areas in order for them to get the liquidity needed to fill their orders. So if one of them wants to buy, let's say, just 1,000,000 shares of Netflix, obviously this is very theoretical, but let's just say that one of them wants to buy 1,000,000 shares of Netflix, right? They can't just go on their brokerage and type in 1,000,000 shares and click buy and then have 1,000,000 shares in their portfolio. It just doesn't work like that. What they're going to have to do is they're going to have to find where there's a ton of less resting liquidity, and they're going to fire off their orders in smaller, maybe 100,000 share orders at a time, probably at different price levels up here, in order to get that size that they need filled. Because like I said, there's just not enough liquidity in the market to provide that to them just instantly, like we have pretty much, I guess, the pleasure of being able to do. If I were to buy, let's say, 100 shares of Netflix, I could type 100 shares into my brokerage, and I will probably instantly get filled with 100. But whenever you're trading with size like that, it just doesn't work like that. There's not enough buyers and sellers to provide that kind of liquidity within the market in one place. So what big money has to do is they're going to drive price to where there's a lot of resting liquidity and get their orders filled, and then once their orders are filled, they will use their size to push price in the direction that they need it to go. So we don't want to fight them, because obviously we know as retail traders that we're not going to be moving the market. Our 100 share orders are doing absolutely nothing to the market. We're not moving it up or down. The only people that are moving the market are big money. So our goal is to recognize what they are doing and then just kind of follow their lead. So anyways, getting into this here, you can see that today we gapped up above the call entry, which would be the previous day's high. We gapped up above that, and that doesn't mean that you instantly need to buy. Whenever that happens, what I like to do is wait for a retest of the level before I make any decisions. Sometimes you'll get a gap up and price will just shoot off and go, and there's nothing you can do about that. It's not a good risk to reward trade to take. It's not, you're not going to have a good probability of being successful on that trade, because there's no interaction with any key level or anything that's going on. So in order for me to get long on this right here, after I open above the entry, I need to see a retest, and I need to see buyers defend this range down here. If I wanted to be bullish, I would not want to see anything back inside this range, because once we get down here, that ultimately opens the door for the low of the previous day, where there's a bunch of resting liquidity down here where the market's going to naturally want to go, if that happens. So as you can see here off the open, we had this small like $4 or $5 push in the first candle, and that was instantly shut down and taken back into the range right here. And you can see, if we zoom in a little bit here, you can see it had a lot of trouble getting back above the previous day's high. Could not close a single 5-minute candle within the first hour of the day above that level. And you can see we finally closed a couple up here, but really volume died off super hard right here. Buyers were not interested in doing any type of business above that previous day's high. And what that tells us is probably that liquidity has been swept up here on this move right here. We broke up above, and all the resting liquidity that was above here has now been swept. It's gone. And what that tells us is the next place where there's going to be a large amount of resting liquidity is going to be the lows, and that's where price is probably going to want to gravitate to, is to the lows where there's a lot of liquidity down here. It doesn't mean that it's always going to get there in one day, or it doesn't even mean that it'll always get there. There'll be times where it breaks down and then they do end up pushing it back up. But I just want to show you guys a basis of how you should be looking at the market and understanding it. So as you can see, after we got the break back below, there was a couple entries that you could have taken here. On this, obviously, you want your entry to be a rejection of this level, because you know that if we break back above here that you're wrong, that the trade is not going in your favor, and you want to have the best risk to reward you possibly can. So your entry needs to be somewhere around the previous day's high, as long as we defend it. So there's a couple places that I could have entered. You could have entered right here. You could have entered right here as well. Ultimately, I missed both of these entries here, and I took this one over here, and I'll talk about why. So if we zoom out here, you can see that we broke below on this move right here. We broke below the 30-minute range, or I guess the opening range. So the range of the first 30 minutes of the day. We broke below that right here. Didn't show much interest, and it looked like buyers wanted to push price up again right here. Now, we've already seen these big rejection right here and this one right here as well. So we know that liquidity up here has been swept. There's probably not too much resting liquidity up here compared to what's down below. And we can see that buyers have absolutely zero interest in doing any business above this level right here. You can see whenever we get up, volume dries up, the candles look weak. Even though we did get a close above here, we have a very indecisive candle that closed in the middle with a wick to the bottom and to the top side. And it just looks very, very weak. There's zero interest above here, and what that tells me is they most likely want to push price back below to go visit this liquidity down here. So given that I missed this entry and this one right here, once price came down here and started going back up, what I did was I mapped out the optimal entry between the high and the low right here. So I took this range right here, and you can see I use my fibs to draw this, and my optimal entry is going to be inside this box right here. That's going to be your optimal entry on your short. You'll see this pattern play out over and over again, and you can use this for the long side too, but there's too much to talk about for just one video right here. I just kind of want to go over the trades, but this is going to be your optimal entry within this zone for a short. You want to take obviously we have a bearish move right here, so the high of the bearish move to the low, and then whenever price trades back up into this area, that's our optimal entry, and that is the entry that we ended up taking on the trade today. We ended up entering Netflix puts here. And as you can see, we came up, tried to trade above this area again, still zero interest, very strong rejection by sellers above, and what that tells us is that we can target these lower areas. So on the put entry down here, or I should say up here, when we entered the puts up here, our targets for the day was a 0.5 standard deviation of this original range right here, and then one full standard deviation of this range right here. That's the targets that I'm looking for to a downside move, and you can see right at the end of the day we came down and smacked the target right there. And we were able to catch a really, really nice $9 move or so on Netflix with puts, and we bought the puts at about $585 per contract, and by the end of the day they were worth $800 per contract, so a solid $215 gain per contract. And yeah, so as you guys can see, came up here, zero interest shown by buyers, even though so this is why it's really important to understand what the market is if you're a breakout trader. So if you're trading off triggers or breakout entries, so say you're trading with if price breaks above this level, then I buy calls, or below, then I buy puts. You can't just trade off the triggers and hope for the best. You have to actually understand what's really happening in the market and what's going on, because most people would see, oh, we're gapped up above the call entry, that means buy calls, and they would get stuck in this move right here and ultimately get trapped very, very badly. If you had some weekly calls, you probably lost at least 50% on that right there. And that's why it's super important to really understand what's going on in the market. And as you can see, we just stayed patient today, and ultimately it gave us a really solid gain of $215 per contract here. So the next chart I want to go over, this one's a little more simple and really not as complex. We had the same thing here with AMAT today. You could see we had lows of about 125.36 and then the highs of about 129, and then yesterday price never traded outside of that zone. We stayed within that range the whole entire day, so tons of liquidity building on both sides of the market here. And over here we had the same thing. We had a gap above the watch list entry, and when that happens you don't want to do anything. You don't want to take any trade here. You want to wait for a retest for confirmation. And as you can see, sellers were having a really hard time pushing price back into this range right here. You can see we came down, couldn't close a 5-minute candle below the high the previous day, and buyers instantly came in here to take it back up for a quick $2 move off the lows, which doesn't seem like much, but the weekly contracts I grabbed down here, I believe I got them for like 85 bucks a piece, and whenever we were at 130, they were trading for about 150 a piece. So a nice almost 100% gain here in just about an hour. Let's look more like even 30 minutes of trading here. And most people would have got caught up in this right here, and then once price broke down, they probably would have had to deploy their stops, or maybe they got lucky and stayed in for the move. But that's not a strategy that's going to have you be successful in the long term over and over again. You can see we waited for price to return back to entry, and sellers and buyers showed zero interest of wanting to do any business in this area down here. As you can see, we broke back down at the end of the day, but whenever you're just doing scalps off the watch list, you got a nice 100% gain on your contracts just from waiting, being patient, and understanding what's happening in the market and how it's trading. So yeah, those are two trades that we took today. Both of them paid very nicely, and I just kind of wanted to talk about that with you guys and go over what I saw within the charts and how you need to see the charts in order to be successful in the long term. So hopefully this video was able to help you guys out, and other than that, you guys enjoy the rest of your day.